Without any government help, how many infrastructure projects will be canceled this year and where?
Sure. We're seeing some big challenges in the market right now. There was quite a bit of work that continued through 2020, but we've seen a slowdown in that project pipeline from state and local governments. And right now, we have about 18 states that have plans to probably delay or cancel about $12 billion in projects. And that federal piece that you're referring to is absolutely key. And I think that the new administration and Congress have a real opportunity to make an economic impact if they really take a look at infrastructure and pass a long-term bill.
What kind of infrastructure, Alison?
So we're expecting delays across all nodes. So highways, bridges, transit and airports, as well as even investment in rail and ports and waterways. And a lot of that has to do with that broader economic slowdown that we've been talking about. Certainly the decline in demand has had a big impact on those state and local revenues, which are largely dependent on user fees coming in. So that's where the federal surface transportation program, that investment, certainly the extension of the FAST Act, the highway bill this year has helped. But a long-term bill is really going to be key to trying to turn what we expect to be a market decline next year around in the future.
So you just raised a lot of things that need to also be fixed, right? But what about new stuff? I mean, if you work on a green energy plan, some of that's going to have a whole new infrastructure base. Where is that?
So in terms of where the investments go, states make those decisions, but certainly the federal piece is a big part of that capital investment for those major repairs in infrastructure and new projects as well. But a lot of that funding is going towards the repair, major reconstruction, and that's going to be key when we think about the long-term economic recovery as well as business productivity. So there are lots of opportunities where states really do need this federal support, especially with the decline in demand. We've seen more people traveling on the highways. We've seen that return, but still for the airport and transit sector, there's still low demand right now, which is impacting that long-term revenue outlook.
Do you think that do you think we should be thinking about new ways of funding, particularly roads in the United States? Clearly, there's going to have to be a lot of money spent. Do we need a higher gas tax? Do you need a VMT tax, i.e. a per mile tax? Do we need to rethink about the ways that consumers of this transportation infrastructure actually help assist pay for it?
Yeah, I think that's definitely on the table, and we've seen interest in that certainly through some state programs to look at alternative revenues. We've seen that in some work at the federal level with research into that, but absolutely, how to pay for it has always been the stumbling block. And this is where that revenue mechanism, especially at the federal level, is really important. And we've seen a number of states, over 30, raise their own state gas taxes the last few years to pay for infrastructure investment. And on the federal side, what we see is long-term, if there is a longer-term bill that is passed, that can spur real growth in project delivery of 5 to 8%. There's a very strong correlation. And the flip side is that when we see periods of uncertainty or shorter-term federal investment bills, we actually see a decline in market activity. So that's where that federal piece is going to be important. And if we can get Congress to step up and have the political will, just like we've seen in the state, to make some of those revenue decisions, I think that would be a combination that would really help support our economic recovery over the next year or two.
So where does the muni market then fit into it? In theory, if the high yield market and investment grade market's open, so should the muni market be. Is that the case?
Yeah, we've seen definitely states, facing these revenue shortfalls. They're looking at a variety of things. So we have seen bonds be a very important funding component for a number of states to continue to try and preserve their capital programs over the next year. And then we're also seeing some states borrow their general fund revenues or look for other sources of revenue. And then, of course, some states, as I mentioned, are going to be pulling back on projects in the next year. And that's where we're going to see that market decline across the modes.
Alison, can you just give me a sort of sense of the scale of the challenge required to electrify the US highway network? This almost feels like we're getting back to kind of the Eisenhower construction of the interstate highway network. It's basically a rebuild for a next generation of vehicles. How big a challenge is this, and how much money do you think it would cost?
There is a significant amount of investment that needs to be made across all modes. If you look just at highways, the highway, bridge, and transit sector, last year the Senate and the House both put forward bills that would have increased spending between 27 and 42% above levels, and that certainly, I would say, is a good starting place, but we really would probably need to double our investment if we wanted to make all of the repairs that are really cost beneficial throughout the system.